Good morning. Ian Cooper here with ChasingMarkets.com. Have an interesting technical setup on oil to share with you this morning. In recent weeks, oil pulled back from around 72.5 to less than 66 on news that Russia and Saudi Arabia would increase oil production, especially as we near the next OPEC meeting. However, technically, it appears oil is about to rebound and turn higher near term. In fact, each time we have seen this exact setup, oil prices have pushed higher. At the moment, oil now sits at its lower Bollinger Band. At the same time, RSI is just beginning to push off its 30 line. MACD is down too much too soon, and Williams' percentage range is now below its 70 line. Each time that this has happened over the last few years, we have seen a near-term rebound in oil prices. We can see the same thing happened in early February as well, as oil hit its lower Bollinger Band just below $60 a barrel. RSI at the 30 line, MACD down too much too soon. Williams' percentage range again below the 70 line. Just to show you how this looks, let's go back about 2 years here as well, so we can see that this technical setup is sustainable at this point. You can see that each time oil prices hit its lower Bollinger Band, set at 2 standard deviations above and below the 20-day moving average, oil prices begin to pivot and move in the other direction. Of course, you never want to rely on a single indicator as a reason to buy. So we confirm with RSI. Also notice when oil has hit its lower Bollinger Band, when RSI moves to or below its 30 line, we have confirmation that oil is oversold. We want to confirm again. When MACD pulls back too much too soon, we can have another confirming tool that lets us know that oil could be about to pivot and move higher. And of course, we can confirm again with Williams' percentage range. Notice what happens each time that Williams drops below its 70 line, confirming MACD, the Bollinger Band, and RSI. Not long after, oil pivots and turns in the other direction. Now, we can also see this from the other side as well. When oil prices become overbought, we can tell when it's likely to pivot and move in the other direction as well. In fact, each time oil hits its upper Bollinger Band, again set at 2 standard deviations above and below the 20-day moving average, coupled with RSI above 70, coupled with MACD pushing up too much too soon, and with Williams' percentage range pushing above its 20 line, that lets us know that oil prices are beginning to become a bit overbought. And each time these indicators have aligned and agreed with one another, oil prices have typically pulled back in many, many cases. Now, this is not a perfect indicator. It's not going to provide success 100% of the time. There's no such thing as a holy grail to trading and investing in this market. This is just another technical tool to be very well aware of as you look for opportunities. At the moment, again, we believe that oil could be about to push higher based on 2 things. One, it's at its lower Bollinger Band. RSI is beginning to pivot off its 30 line. MACD is down too much too soon. Williams' percentage range below its 70 line. We also have to consider that a lot of the news from Russia and Saudi Arabia may be fully priced into oil prices at this point. It's just something to keep in mind as you look for opportunities. Again, this has been ChasingMarkets.com. We'll speak again soon.